What's going on, everyone? There has been a lot of strong movement this week in both directions, and we have one more day left to the week. 58% of stocks in the S&P 500 closed up in the green yesterday, where quantum stocks especially got crushed after some big words from the NVIDIA CEO. And there's a little bit of drama going on here, so that's pretty interesting. And these stocks moved in a pretty massive way, but there are also a handful of other important things to keep on the radar before the week ends. But either way, we have a lot to talk about today and some great setups to keep on your radar for tomorrow. So besides that, Tom, let's get right to it.
Yeah, the SPY was pretty slow and choppy on Wednesday, but I will say the quantum stocks, that's where the main action was, and that's where the action has been. So looking at QUBT, QBTS, IONQ, and even RGTI, all these stocks fell in a massive way, and RGTI kind of led the way, down 45%. I mean, oh my gosh, Mike, IONQ was down 39%. These pullbacks were very, very massive here, and this is coming after NVIDIA's CEO, Jensen Huang, actually said that quantum was still 15 to 30 years away, and it just had a huge connotation to this overall talk with quantum. Now, of course, quantum is something that's gonna be more, obviously, I would say, Mike, it will come to light more in the future, right? Like right now, quantum is a very new thing. Now, it's not new in the way of like, oh yeah, this is our first time hearing about it. It's been something that's been out for a little while. But, you know, whenever Jensen Huang actually does say that it's going to take 15 years for very useful quantum computers, that's definitely a negative statement, right? And there is actually some pushback to his statements, though, which is funny. So we have ticker symbol QBTS. This is actually the company D-Wave. Their CEO came out and said that Huang is dead wrong and that they actually have big paying clients today for quantum. So at the end of the day, there's a lot of drama going on here, Mike, but the quantum sector definitely took a massive hit, and I know a lot of traders that got caught holding these definitely did not like that action, whereas I do know on Wednesday, a lot of traders adapted and did trade these back to the downside and actually caught some pretty decent moves. So I guess it depends on which side of the move you're on, whether you like it or not, but at the end of the day, this is some insane price action.
No doubt, and what's nice is that we did look at quantum stocks in a pretty bearish way earlier throughout the week in multiple videos. So I did see that a handful of people did do pretty well with that, which was nice to see. But what I think is most important is about, like, you know, what is next for these stocks in the short term and the quantum industry as a whole. Like you said, Tom, quantum is not something that is brand new, but it's also a technology that is still in the beginning stages. Realistically, from all of the currently available information, it seems like this industry will need some time to develop. There are some companies that are better positioned than others, and if you are someone who truly believes in these stocks for the long term and you understand that they are very high risk, very high reward, then that's one thing. But again, that comes with an ultra long-term mindset. Right now, there's just so much euphoria in general with these stocks, and it is starting to deflate. When we look at them in the short term, whether you are looking at RGTI, QBTS, QUBT, IONQ, or any of the other ones, a lot of these stocks are basically falling from the heavens right now, and they are having big changes in their supply and demand dynamic. What comes along with that is the price action that we're currently seeing. So as I look at these stocks right now, I am skeptical about their path forward. I think they are going to need a ton of momentum in order to resume the uptrend that they have been on. And given how much they fell on Wednesday, where we have some stocks like RGTI down by over 45% in a day, that is a major warning sign. And sure, they can pop up in the short term just due to natural like fluctuation. But again, I am a little skeptical of these stocks in the short term.
Yeah, and I mean, looking at the daily chart, they definitely did get to that point of being overextended, in my opinion. These stocks got up in a pretty massive way. Looking at the recent lows just from like the middle of September to the recent high with RGTI, we're talking 2,800%. Okay, not 280%, 2,800% from these lows of September. And, I could even fudge those numbers a little bit more and probably get to 3,000%. But nonetheless, RGTI is definitely pulling over here a lot, Mike. And I don't think that this is necessarily going to be the beginning of a opportunity for a dip buy either. I do think that it will take a little while longer. Now, I could be wrong, and maybe, the market will open up tomorrow and we'll see all these quantum stocks recovering back up to fill the gaps. But I don't know. Personally, I think that this downtrend will last a little while longer, but this will be a good thing because on these downtrends, there will be some good discounts that will probably become available on these stocks. So don't necessarily be upset by these stocks pulling back. It's something natural and healthy, and it will create better buying opportunities for the future as well.
Exactly. Like if you are someone who's bullish on quantum for the long term, then it might be a smart idea to, hope for a further sell off in the short term where maybe you can get much better deals for like a long term hold. The way I look at the quantum situation right now is I'm going to be looking and hoping for these stocks to have like a decent like move up in the short term that would provide a like medium-term bearish opportunity. So for example, if we look at ticker symbol, let's say IONQ, because that's the one that's currently on the chart. Right now it's trading for around $30 a share. I think what like a great trading opportunity would be with this one is like maybe if the stock had a short-term pop back up to like 36 to maybe like 39, somewhere in that area, maybe a little bit higher depending on like how risky you want to get with it, and then shorting there and playing the move lower. But of course, these stocks are crazy risky. What really matters more than anything else is like what is currently going on in the moment because the situation is changing so rapidly. So keep that in mind. These stocks are crazy and we'll keep a close eye on them going forward.
Yeah, 100%. One thing I do just want to mention for tomorrow, right at market open, be a little bit wary. All these stocks fell off so much. Sometimes whenever you see pullbacks of 45%, you might see like a little bit of consolidation the very next day there. So keep that in mind too. We might see a couple consolidation days before some of these stocks start to really make some bigger decisions here and some bigger movement. But Mike, with the next major topic here, there's been these wildfires going on all across California, and this has been wild, and it's not something that has been necessarily new either. This has been something that's been going on for a long time. There's been companies being affected by this, and I just want to kind of start out with saying that my prayers go out to everybody involved with this. It's a terrible thing to see these wildfires continuing. Now, of course, this article is from 2018, just to kind of show you guys how long California has been having these issues, because we've been seeing issues with different companies and stuff arising from these fires. But Mike, it looks like these fires are starting to pick up again, and there's a couple tickers here that do actually get affected by this, like PCG, which has actually fallen a lot in the past and has even had to file for bankruptcy because of all of the lawsuits stemming from some of these fires.
Yeah, I mean, the whole situation is devastating and the damage is just like indescribable. I know at least 5 people have already died, thousands of buildings have been destroyed, and I heard some statements that this could actually be like one of the most destructive natural disasters in LA history. So it is pretty serious, but like you said, like there are like stocks that do move from this. Like, PCG is one, but also EIX, which is a California utility company, which is Edison International, and just keep these stocks on the radar, I guess you can say. The situation is beyond devastating, and of course the stock market is connected to everything. And like you said, Tom, like PCG in the past, when there have been major wildfires and PCG has been held liable for some of those, the stock took quite the beating.
Yeah, I mean, some of these drops are insane. Like within just a few weeks before, PCG's fallen 64%. And then, of course, like whenever they start announcing some of their other stuff like bankruptcy, things can get even worse. Some of these drops like 75% in the short term, and it can be brutal out there for some of these companies, and of course even brutal for people living in California. So hopefully they can get this situation under control a little bit. And now I have seen this is that PCG has actually been trying to fix this for a while. Apparently, they've been racing to stem increasing fires, and this was from August 22nd of 2024, so just earlier, a couple months ago, pretty much. And there was already 29 fires in recent weeks back then. So it's wild out there in California. As we know, as we get into the drier time of the year, the fires definitely pick up. So just keep these stocks on the radar. It can definitely cause some more action. And then, of course, if these fires start to develop and become even larger, it could spill over into other sectors as well.
Exactly. But with other news, as we know, the inauguration is coming up pretty soon, and that will come with a lot of changes. The market is going to change in a few different major ways, where for those of you who were trading back in Trump's first term, he loves to tweet, and his tweets tend to move the markets quite a bit. Whether he tweets a lot or not, the statements that he makes tend to be pretty bold, and they tend to have pretty big impacts on the market. So this is one thing to be aware of ahead of time. And as we've seen over the past couple of weeks and months, more and more of these big tech companies are kissing the ring, and Google Google just had their turn. So Google just donated $1 million to Trump's inauguration fund. I think this is pretty interesting because in the short term, we have seen, $1 million donations from Google, OpenAI, Amazon, Apple, Meta, and even other companies. And I think this is going to play out in a very interesting way where, big tech has a lot to gain, but also a lot to lose. And I also think it's a little bit, I guess we can say, interesting how, a lot of these major big tech players are all donating $1 million to Trump's inauguration fund. Is this the entry ticket or something to get on Trump's good side? I don't know, but it definitely is worth observing.
Yeah, it is. It's kind of funny too. It's $1 million. We're talking about companies that seem to shed billions of dollars like it's nothing, and they're out here donating $1 million. I don't know if let's say Meta, let's say saw Amazon and Apple do it, so then they're oh yeah, we're gonna jump on board, or if it's something that behind the scenes, like you said, it's the entry ticket. Definitely interesting nonetheless, but looks like Google is joining in at least, which is good. So I guess I can add Google to my nice list, right, for Trump's presidency. I'll definitely keep them on watch for the next 4 years. But, Google is a major player out there, and I will say they've been a little bit under the radar lately with how they've been running up the new all-time highs. I feel of course, NVIDIA and Apple and a lot of these other companies steal the spotlight a lot from Google, but they are having some issues in the short term, Mike. There's a big resistance at $200 with this psychological level. A very interesting price action with Google. I know that this news probably won't move their stock a ton in the short term, but this double top is definitely something I'm watching for.
Yeah, and big tech stocks are at a crucial point right now where a lot of big tech stocks have some heavy resistance levels overhead, and if they reject off of those resistance levels, there's probably a decent shot that it won't just be a nice light rejection, as we've seen with NVIDIA as a prime example. And what's worth keeping in mind with that is that the stock market is not an equal place. When we go to the heat map, there's a reason that you have companies like Apple, NVIDIA, Microsoft, Google, Meta, Amazon, and Tesla that have much larger boxes than all these other companies, and it goes hand in hand with the fact that they directly move the market a lot more. They have, more of an impact on the market than anything else out there. So what these big tech stocks do will not only be big directly for the market, but also for general investor sentiment. So, big tech stocks need to be watched very closely, not only over the coming weeks, but especially over these next couple months, because they will have a big impact in how things play out.
Yeah, and it's been a big reason why the SPY's been pulling back here in the short term. We look at the S&P 500, it kind of peaked out at the beginning of December and has been kind of flattened down ever since. And what has also been flattened down since the beginning of December, NVIDIA hasn't really broken out since then. Apple's actually been peaking out the past few weeks. We've been seeing Microsoft get really stuck over the past few weeks as well. So there's been a lot of negative price action out there with these tech stocks, and these stocks have been part of it. And even Tesla, they were roaring right at the beginning of December, but now recently they're starting to add more fuel to the fire to the downside as well. And we could see some more downtrend continue in the short term. And don't be surprised, because even earlier this week, we were looking at some historical data that showed that that's not necessarily a surprising thing to see in January, right? The beginning of January is actually pretty shaky, which was kind of surprising to find out.
Yeah, and looking more at some like specific SPY levels for the short term, of course we had those increasing lower highs, but like what else is on the radar?
Yeah, it was pretty shaky on Wednesday with the SPY. Honestly, very flat. And I'm really watching 585 as a major support in the short term. This is going to be on the radar. Those lower highs are definitely terrible to see with the SPY. That's a bearish sign. But there's also higher lows going on in the short term too. So I am going to be watching some big areas for support coming up on the SPY. I do like 585, but even 584, just under 585, I think will be extremely crucial as well. We've been seeing a lot of good bounces right around this range, so I will be watching this very, very carefully. If the SPY breaks below here, I will start to become a lot more bearish, but I am leaning to the downside with everything going on in the short term. But that 585 mark is definitely going to be pretty crucial with how many bounces that has seen. If that gives out, 580 is 100% the next major level that I'm watching, and then 578, which is the recent low down there circled on the left side of the screen. But with the SPY, I do think that it's important right now. SPY is very stuck in this wedge right now, and it's going back and forth, and it's very volatile. So as it approaches the bottom of this wedge, watch this lower trend. If we do see another bounce back up, don't be surprised and be ready to adapt there. That's one thing that I think traders are getting kind of stuck with right now, Mike, is that the SPY is so back and forth over the past few weeks. There's no real direction being picked, but there's great intraday opportunities to be had from this.
And another thing is that during times of, let's say, like chop or back and forthness, we'll call it, you don't have to trade that. Like, you can say either like, okay, I'm either just not going to trade at all, or you can just focus on where the price action is the strongest and smoothest. So like on Thursday, that would be with quantum stocks. A couple days before that, it might be with like chip stocks to the upside and so on. So, keep in mind, you don't have to put yourself in positions where, the direction is just like, too unpredictable. So keep that in mind. But looking at some important events for tomorrow, we do have some key employment data set to release 1 hour before the market opens. Definitely keep this on the radar, as it will have an impact on the market before it even opens. And then 30 minutes after the market opens, we do have some Michigan consumer sentiment data set to release. So definitely keep that on the radar as well. And then in terms of earnings, there isn't anything too crazy, but Tilray, Delta, and Walgreens all report.
Yeah, those are pretty big. I mean, there definitely no Nvidias there, right? But Walgreens especially needs to have a good report here, right? We keep looking at that one. They were down again on Wednesday. Surprise, surprise. But I am going to be watching this range very closely. If they end up bouncing up off of this, there might actually be some great continuation setups as they start to fill the gap back towards like $15, so to say. But that is definitely something I'm watching for, Mike, is if this lower base continues to hold on Walgreens, it could get pretty fun over the next month or so.
There we go. All right, well, let's get right to some setups and predictions then. A stock that is definitely on my radar is NVIDIA. It had a major ejection off of the $152.50 area, and the stock has definitely been selling off in a pretty strong way. I would like to see this stock stay under the $146 level to continue this short-term downtrend and potentially test the $133 level as an area of support sometime soon. Again, we have seen a lot of selling pressure in the short term, not only with this company, but even with the market in general. I'm looking at NVIDIA still to the downside, but again, I want to see it stay under 146.
Yeah, that's a pretty big spot in the short term. I'll be watching for it to stay under there as well. With my first setup, I'm looking at Enphase for a continuation to the downside. Poor Enphase has been pulling back pretty hard, and looking at the daily chart, they tried to mount a recovery recently. But as of this week, they actually rejected again, right off resistance, and they're starting to turn back over. So I'm definitely going to be watching for more downside action in the short term. I love finding setups like that on the daily chart to give me more confidence on the intraday setups. But nonetheless, I'll pretty much be watching for a pullback under $69, Elon Musk's favorite number. But if we do get a pullback under 69, I will be watching Enphase back down as it keeps turning over.
All right. With the next one, we have NEM, and this one is actually to the upside. So this is a gold mining company, and gold has been doing pretty good in general, and these past couple of weeks have been positive, but a little bit slow and choppy. But either way, NEM has sold off in a major way over the past few months, and it is holding the $37 area of support in a very strong way, where it has resistance at $40 and then that $41.50 to $42.50 area as a whole. Either way, NEM is on my bullish radar, and it's more of like a short-term dip buy style setup. But again, there is some pretty close resistance, and that $37 support is important.
Yeah, I really like the setup here with gold in the short term. NEM starting to see a lot of good action, but even looking at GLD, it's starting to hold its bottom support range very, very well, which should help a lot of these miners. With my next setup, I'm looking at UAL to the upside. Now, this is a pretty crazy setup. They're up 2.48% on Wednesday, and they're actually approaching an all-time high. So what I'm really looking for is the all-time high to potentially break right around $105. If we see that break with UAL, I'm going to keep watching for a potential upside move. This is kind of like the third test of this in the short term. There's been a lot of, I would say, attempts to push this range and break it, but of course there's been a lot of rejections as well. So definitely make sure that you see 105 break, make it break in a pretty clear way, but once you see the breakout, there could be some good action with UAL. It is surprising, Mike, how it's moving when the market's not moving. Now, it is an airline, so they do have more of a mind of their own, but they do have a pretty strong correlation to SPY too.
No doubt. So either way, we'll definitely keep it on the radar. But besides that, it is now about that time for today's momentum plays. And with the first one, we have Lucid to the downside.
Yeah, poor Lucid selling off in the short term. They're right under $3 a share now again. If they break under $2.95, then keep watching them to the downside.
All right, with the next one, we have Walmart to the upside.
Yeah, Walmart, kind of a weird one, right? But a little bit more consistent in the short term than many others. If they end up breaking out above $92, watch for more of a breakout.
And with the last one, we have CZR to the downside.
Yeah, Caesar's down 3.24%. Pretty bad move, and I love how they're breaking this $32 area. So if they break that even more and they break under $31.80, keep watching CZR down. $31.80 is a pretty good short-term bottom and support.
All right, sounds good. So we have CZR and Lucid on watches for potential moves lower, and then we have Walmart on watch for a potential move higher. Either way, these three stocks are on watch for potential day trades tomorrow if and only if they break through the levels listed. The stronger and more consistent they move, the better these setups become. These stocks are volatile, so be happy to adjust and flow with the trend changes as they happen. As always, have stop losses and protect your risk. But besides that, it is now about that time for today's $1.4 million big money trade. And we are looking at ticker symbol GLD. So for those of you who don't know, GLD follows the price of gold, and the big money traded the 250 strike call options that expire on April 17th of 2025. This is a $1.4 million trade, where they want the ETF to go up. For my more advanced traders out there, this is also technically a call debit spread where they shorted the 275 strike call options. But either way, looking at GLD, it has been moving moving in a pretty strong way, especially throughout 2024. In the short term, it has been a little bit slower and choppier. And given that there will be a lot of changes in the short term in multiple different senses, of course, with the shift of power, of course, there's a lot of geopolitical stuff going on. And there's just a lot of things changing in the world right now and a lot of action happening. Because of that, it can make sense for investors want to hedge their risk, especially given some of the recent selling pressure that we have seen. Gold historically has been a safe haven and does have, the ability to benefit during times of increasing uncertainty. So I can understand why the big money might be looking at a trade like gold. Either way, it's definitely an interesting setup, and it's not like too far away from its all-time highs either. So it'll definitely be worth keeping on the radar.
Yeah, I really like the support on GLD in the short term, right around $240. That's a pretty big area, and there is even a bigger push that got even lower than that to around 236 that you can watch as some larger support. This does have a little bit of time out to April, so definitely keep that in mind. If you're going to follow this one, you'll probably have to hold it at least for a little while, but I do like the way that GLD is bouncing off that 240 mark, and I would not be surprised to see a test again of 250 or even higher. Maybe that recent high or the gap fill up to around 252 would be even better. But at the end of the day, the 250 strike call is a little bit out of the money, not as much as that I would be worried about it, but either way, I do like the play with gold, and it seems like gold has definitely been heating up here off of the bottom of this range. This could be a good dip buying opportunity for a lot of people that have been looking to buy gold. Mike, it almost reminds me of how gold was consolidating in 2024 throughout April, May, and July, but then started to get that big breakout going, and I feel like we're kind of in that period of consolidation now, whereas we might be on the final end of that for the break.
Yeah, so either way, let's keep it close on watch. Gold definitely moves in, some pretty interesting ways. There's a lot that goes into it, and it definitely has a lot to benefit from during times of uncertainty. So keep it on the radar. But if you guys are new to the channel, consider obliterating that subscribe button to get our videos recommended to you more often. In every single video, we cover big money trades, just like this $1.4 million one with GLD, the most important earnings, events, setups, and information that you have to know. And it takes us hours to make these videos, and we try to make these videos nice, simple, and kind of funny sometimes. So feel free to subscribe if you like our videos, and you'll get them recommended to you more often. But before we close out, we also want to give a giant shout out to today's member of the day, Jay Bass, who's been a great member of the community for some months now and had a great post in the Profits channel yesterday. So huge shout out to you, and keep up the great work going forward. It is awesome to see posts like this one, and thanks for being a great active member of the community. Besides that, thank you all so much for watching. We only have one more day left of the trading week, so let's make it count.